We're not cake time.
Okay, we are recording, and it is September 21st on Wednesday. It is a review session, or it'll be a combination of a mini review session. I did post in the announcements the content that will be on the exam, and we'll talk a little bit more about the 5-chapter exam that's coming. Additionally, I'm going to open the floor to anything that you have as far as questions, module 4 or 5, or even previous 1, 2, or 3. Happy to go back if need be. I did indicate, and we started a conversation earlier already tonight, if you have a specific problem, a specific module, a specific area that you're trying to work on and have challenges, and you want me to do a review, I'm happy to do a separate review recording and post that. There are a bunch of recordings already there on the ancillary materials that you can find. I'm also happy to do a one-on-one. And I was saying, if you really are challenged and you need an extension past the Sunday night and you can't wait till we're meeting on Monday, I'm happy to do an extension if need be. The goal is not get you. The goal is to have you succeed and to learn. So anything I can do to enhance that, that's my mission, that's my goal, that's my job, that's my direction. So I'm going to open the floors to questions shortly and see what you want to cover. But initially, I am going to cover the chapters 1 through 5. And as I said, posted in the announcements is an outline for the materials that, yes, formulas you'll need to memorize. I didn't put the formulas there other than what they are. That helps you study too, by the way. Right? If I put all the formulas down and everything you needed, people will say, great, I know it. But if you kind of are manually going through and saying, oh yeah, my return on assets, I can do that. My days sales inventory, oh, DSI. Okay, I can do that. My operating cycle, okay, I can figure that out. So those are the things that I want to make sure that you understand going into the exam. There was a question on exam format. It'll be roughly 50-ish questions, similar multiple choice style to the quizzes you've had, although they might be a little, they'll be similar enough in terms of content, but the calculations, the homework calculations you've had to make, you'll have to do on the exam as well, even though you won't have to itemize the calculations as you do them. I don't need to see the work done. And it will be on full respondus accessible. And yes, we'll get to see your smiling faces, or maybe not smiling at that point, but you'll be smiling after it's done, I'm sure. And that will be the nature of the exam. I plan about 2-hour time slot, or less than 2 hours. But you will also, just to be aware, even if you did have other resources you were trying to summarize or access, you're not going to have a lot of time. So when you're doing the questions, you say, wait a minute, I'm doing 50 questions in 2 hours. So maybe I've got maybe 2.5 minutes a question. That's going to be tight for some of the calculations. Some of it's concepts, but there'll be a number of calculations as well. And so the calculations you're going to be expected to be able to handle. And I don't know the best way to practice individually, but for some it's flashcards, for some it's review, whatever it takes. And those are the kind of things that will be beneficial to you. I did mention the Ben and Boz is not a bad review either, benandboz.com. They both have the spreadsheet stuff, but they also have the financial accounting stuff that is, again, pretty foundational to what we've been doing. So if you want to strengthen that foundation, that's a good source, that's a good tool. My videos, hopefully you're getting acclimated to those, getting comfortable with those. And there are a whole bunch of other videos, if that's the way you learn, that are available to you. So I'm first going to open the floor to specific questions that I will set aside, but then I will review what these on the exam. But any questions you want to cover tonight, problems, exercises? Chico, I see that you are on tap.
Hi, it's just a quick question about the exam. You might have said this already, and I probably missed it, but do you know the proportion of calculation questions to non-calculation questions? I know it's 50 questions and it's 2 hours.
Right. I will say, I will make that calculation for you. Okay, I didn't do it. I'm thinking about a third.
Because the calculation questions take a little bit longer. That's why I'm like trying to figure out. Yeah.
Agreed. I'm guessing about a third or more concepts, or some are fairly quick calculations.
Okay.
They're not going to be, I mean, module 4, especially those last couple of problems that I gave you the
Mhm.
spreadsheet on, those were pretty intense, pretty involved. And so they're not going to be as intense from that. There may be a couple relating to it.
Because some of the calculations in module 4 require like multi-step
Right.
stuff. So
I'm
that's
gonna
why
do
I'm
my
like,
best
huh,
to give you single steps rather than trying to do a multi-step, okay? Because
that's a thumbs up on that one. Thank you.
yeah, no, that's fair, because you're right. I could give you one problem, it's gonna be 45 minutes.
Yes,
So
that's usually
I
what's
don't want
happening
you
to me.
getting
Yeah.
lost at that level. So
Yeah.
I'm gonna try to, I do try to segment it and break it down. So great question and great feedback. And I will do a calculation analysis and come up with the
Right.
percentage of, and I'll add that to the announcement that I just posted. But it gives you an idea of, but again, the calculations, you might have the 3 or 4 steps you had in a problem, those would be separate questions. So we're not gonna
Oh,
have
okay.
you go down. I mean, I'm doing my advanced accounting now, my financial reporting 3, and they got to go through a lot of work to get to the one answer. And that's okay in that environment. In this environment, I want you to be comfortable, and I don't want to penalize you if you get caught in the middle and say, oh, I missed a decimal, missed a calculation, and all of a sudden, three
Yeah.
rows down, you're saying, my number doesn't even look close to what the options are. So no, this is not a gotcha kind of moment. We're not trying to seek that out. So hopefully that answers the question and reassures at least where we're going with this. Because they're,
Thank you.
oh, you're very welcome. Thank you for asking. Other comments or questions? Please, Brooke.
To go off of well, not about the exam, but so I just had a question. You can go over it whenever. About I think it was like the last 2 on the homework, the module.
10 and 11?
Yeah, I think I try to remember what the numbers were, but I'm pretty sure that's what they were like they struggled me a little bit. So that's what I was going to ask.
Did the spreadsheet help at all?
It did a little bit, but I don't know. It did. I'm not trying to say it didn't, but yeah. I still wanted to ask you because I wanted you to do it. So then it just helps when I you go through how you know what I'm saying? I don't know. So
Yep. I get it. And by the way, we did discover in one situation that the book was wrong. And I will share all the questions, virtually all the homework questions are algorithmic. So the numbers I throw in and the numbers, Brooke, that you might have, the numbers Christopher might have, and Octavius might have, and Leah might have, they're going to be different numbers on your homework. So when you try to compare notes, even after it's done, and I don't see the final answers until you post them either, because they're algorithmic. So I will get to, I can see those, but we did discover some errors. It's not, the system's not perfect. I know when I first was looking at the course this summer, there was an errata sheet that said, okay, there's some typos in the book in the areas, and nothing major that really would have caught you up. But the same thing happens in the problems and the modulars and the homework. So sometimes the homework is wrong. Very rarely, by the way, I think 98% of the time it's right. So don't claim it's wrong the first chance you get saying the homework must be wrong. As Dr. Scott said, it's wrong.
it was in the back of my head.
Yeah, you're gonna have that seed saying, really, if it can't be wrong, I'm one of the lucky ones, right? No, chances are it is correct, but it can happen. So I don't want, and again, if I don't want you spending 3 hours or 4 hours on one question trying to get frustrated. Reach out. Let's resolve it, because this is not supposed to be frustrating. It's supposed to be a learning experience. We're not trying to teach you resiliency. That's one of the factors in success. Those soft skills or success skills. That's not the skill we're working on here. We're working on the actual factual ability to do the accounting, understand the numbers, feel the flow, and interpret the numbers. Because it's numbers intensive, and not everybody is a fan of numbers, but we need you to get comfortable in seeing them, understanding them, and working with them. So we can take a look at that too. We'll go through the we'll go on track.
Thank you.
Kristen, take it away.
Real quick, sorry.
Okay, sorry.
I know that this is a nitnoid obnoxious thing to complain about, but on the test, can we please have a uniform number of decimal points that we're supposed to be putting? There is nothing more annoying in my life than 0.1, 0.2. Like I
Okay.
When I get through and I'm like, no, that's definitely right. I've rerun the calculation 7 times and this question says you need 2 decimal points and that one says you need 7. Like, I want to just throw my laptop.
Because these will be multiple choice, you will see the answers.
Okay, all right.
So that's the, we'll cut that off at the bridge, cut that off at the pass. We'll get there. I mean, I'm a fan of 2 decimal and yeah, I've had, and some of you, we've talked about it. You said, I've recalculated this, it's 7.1%. Well, we go back and realize it's 2 decimal points, it's 7.13%. I'm sorry. That it's frustrating. I get it. And I can take that as a pet peeve. And in the homework, they got you. They specify 2 decimals, 4 decimals, whatever it might be.
Oh, they do. It's just, it's not uniform by homework. It
not-
bounces by question and that's nonsense.
But on the exam, we're not going to worry about that. And by the way, I offer the option, anytime you take a quiz or a test, if you come back to me and you can justify, I gave this answer because the way I calculate, the way I read the question, because not all questions are perfect. Not all answers are perfect. Now, the homework I'm not so worried about, and you probably aren't, but quizzes and tests, you're probably more concerned. If you come back at me and say, here's how I calculated this, here's how I looked at it, here's how I interpreted it, I can and will give you full credit for a question. Now, if it's not obvious, if I say, you know what, I can see you might have read it that way, but you really, the big picture here would read it this way. Yep, I won't change it. But I have no problem changing, even the official answers are subject to interpretation sometimes. So you might come back and say, here's what I did, here's how I calculated. And if your logic's good and the question is a little bit feeble, I'm happy to accommodate that as well on quizzes or exams. So please feel free to reach out. I'm not opening the door saying every question I got wrong. We're gonna have a conversation, Scott. No, but I want to make sure that you feel comfortable enough saying, you know what, here's how I interpret, or this word meant this to me, and whatever it might be. So please feel free. The door is open for that conversation. Because again, this is not a course to get you. It's a course to get you to understand. That's where we're headed. Great questions, great input.
Hey, Dr. Scott, are we permitted to have a scratch sheet for the calculations?
A blank scratch sheet, yes, and I'll be asking you to show it. If you have a sheet that you're writing on, I'm going to ask you to show me the sheet at the beginning on Respondus. Because I don't want you kind of substituting, saying, oh, I got another sheet here, and I'm playing that game. But yeah, you can have a scratch sheet to make calculations. Or once the exam starts, write down your formulas like crazy. If you want to remember some, but I just don't want a crib sheet that has, the formulas that everybody's going to be using and basing things on, because the questions are geared towards having you understand how to do the calculation and then interpret the calculation. So, thank you, Jessica. Great question.
I don't know if this is just on 9, but are you going to make it able so that we are able to review quizzes 2 and 3?
You should be able to now.
Okay, mine weren't popping up, so I just wasn't sure.
Okay, if you're having problems with that, reach out to me after this.
Okay.
But I have the settings that after due date, Thursday night, midnight, 11:59. At midnight, you have your quizzes available to you.
Okay,
And
because
if
they should just be in the quizzes section of Blackboard, right? Okay.
Yep. So if there's a problem, and has anybody else had problems doing that? Anybody checked back their quizzes and took a look at answers, and have you been able to? Did you have to go directly into My Business course, or could you do it directly through Blackboard? You should do it through Blackboard.
I went directly through Blackboard.
Directly through Blackboard.
Yeah, I think it just takes you, to business or whatever, so.
It takes you to the My Business course Blackboard.
Yeah.
I mean, you should be able to go into either, but I just want to make sure you didn't have to go into the original platform directly. Because I didn't think you had to, because Blackboard should cover it. So Kate, if you've got a problem, let me know. Again, we'll resolve it. And by the way, if you have support issues, there was a support number in the syllabus, but also talk to me and I've got direct access. The support here is basically business hours. Other systems I've used, they go till midnight. They go on weekends. These guys are not open on weekends. They go a little bit later some days, but it's basically business hours. But if you have a problem or question, let me know. And I'll always email, and I get prompted responses the next morning. They have a really good support staff in terms of getting responses to any questions you might have.
Okay, thank you.
Oh, you're very welcome. Thank you very much.
And Dr. Scott, just in terms of like verbiage, you're not looking to like drastically switch up, because I'm just noticing from like the homework and the quizzes, some of the verbiage is a little bit different, like you was explaining to us. So I'm not sure how that would look in the exam.
The exam is going to be, it's because it's multiple choice or multiple guess, depending on perspective. The difference is going to be, it's going to be more similar to the quizzes than the homework in that sense. But the terminology should not be that different. Usually when I give my lectures, I try to give you the multiple terminologies that go with it and just try to differentiate, because you're right, there's a lot of different ways to call the same things. But NBOT,
I'm only saying that is because like the my business course and your lectures from the YouTube, they're kind of different. So that's why I just was asking that.
they shouldn't be, because I'm actually using their PowerPoints as a base. I add some things and I enhance them and I make some comments, but and some of it may be relating to when you're looking at annual report, you're going to see the terms and they're going to be 3 or 4 different ways of describing the same thing. And the income statement can be called 4 things, even when you look at Edgar. So the terminology I'm using and the PowerPoints I'm using should be consistent. I might be giving you some alternative names, but as you view through the PowerPoint, they should match. And if there's some that don't, if you can let me know, I'd appreciate that, because I do want to make sure there is a consistency. And I don't say those things to confuse you or confound you. It's just when we're looking at real world financial statements, the terminology can and does vary. So I don't want to get you caught up saying, well, it says revenues right here. You use the word revenues and it says sales. Okay. Or cost of goods sold and cost of products sold or cost of sales or any other terms. And you go right down an income statement or balance sheets, there's going to be some variation, not only in the name of the statement, but in the terminology on the statement. Yes, we try to be, but the key is understanding the concepts. If you're looking at an income statement and it starts with net income, oh, that's the one that says comprehensive income. That's the wrong one. And it talks about currencies, exchange rates, talks about pensions, it talks about derivatives. Oh, that's not my income statement. That's confusing as heck. But if I start with revenues or sales or anything related to that, that's my income statement. And then you should be able to see cost of goods sold. And not all statements have cost of goods sold. We talk about multi-step and single step. Single step, no subtotaling. Multi-step has a subtotal and the operating, and there's a nice breakdown. And so most of what we look are multi-step income statements that have the cost of goods sold with the gross profit, that have the SG&A and operating income, and then have the below the line stuff, net of tax type things that are there and that we talk about. So those are things that the terminology is fairly consistent, but not always perfect. So if there's some terms that are confusing, by all means, reach out, let me know. And I'll change videos too, but I'm using as a master guide, the My Business Course PowerPoints, and I break them up, into 10, 12, 15, sometimes 20-minute videos that are hopefully more refined, and they should be matching the book. If I'm using terms that are way off base, then we have a different challenge. So please let me know. You may have heard, and then in my last lecture was sales discounts, sales returns and allowances. So when I was talking about cash discounts, that's actually the practical side of it. I don't think the book goes into as much detail like that I did, but they talk some about that. So that's the one thing that I can think of that was a little variation on the actual book, but it's the same concept and just a change in terminology. Good questions. Anything else come to mind? Well, let's go take a look at our, let's see, I'm going to go over to, a second. Okay, so I'm going to go over to the announcements that I have, and we're going to take a look at the announcement that was just posted talking about the exam. And we'll go through and take a look. I'm going to go ahead and share the screen. I'm going to do advanced. Portion of the screen. Got the first exam. topic listing. So this will be a summary of topics that you're going to see of what we're talking about. And yes, looking forward to your success. Overall, the quizzes have been positive. Exam will be available Sunday to Sunday. It's not going to be a Sunday to Thursday thing. We will still simultaneously have Module 6 Sunday through Thursday. So it's not like we take a week off and do the exam and then we continue the next week. No, we're plowing on through. All right, but by that point, you should have a pretty good handle on the first 5 chapters. So concepts to cover, things like liquidity. We want to make sure you've got comfort levels on the content. Sarbanes-Oxley, basic understanding, what SOX did, where it came from, who created it. Financial effect transactions, balance sheet, income statement, retained earnings statement, cash flow statement. So you want to be pretty good at interpreting, at understanding, at seeing the flow and how things are fitting in on the statements. Because you might be given a couple of numbers and ask for another number. So we will be saying, cash flow, here's 4 out of 5 numbers. You got cash flow, operating, investing, and ending balance in cash. So tell me about financing. Or you get an income statement, calculate gross profit, calculate operating income, whatever it might be, you want to be comfortable with those things. Some of these things, the profit margin, we call net profit margin versus gross profit margin, knowing the difference. We're going to be doing horizontal and vertical analysis. Horizontal is the trends and vertical is the common size, where assets is 100% for a balance sheet, and net sales, not gross sales, but net sales, total net sales is 100% on a common size or income statement. Then we want to make sure the ratios you got down. Net profit margin, gross profit margin, asset turns, inventory turns, and receivable turns. Yes, you should know those formulas and be reasonable company. Financial leverage, current ratio versus working capital. Current ratio is the actual ratio. Working capital is one number minus another. Asset test. And then you want days sales inventory, days payable, and the cash conversion cycle, understand the relationships. Debt to asset ratio, debt to equity ratio, return on assets, return on equity. And remember, any ratio that has an income statement item and a balance sheet item, you got to average the balance sheet item and usually the income statement's on top. Then we have the various permutations of the balance sheet. Understand all of the above. Okay. Retained earnings formula. Yes, by now you've got a pretty good handle on that, I'm sure. Income statement, all elements, operating versus non-operating assets, income and expenses, cash flow, beginning, OIF, operating, investing, financing, and cash. The DuPont relationships. Yes, those formulas, how that fits together and the matrix that goes with that. Net non-operating obligations, FLEV, financial lev, non-operating assets. And there are a couple of formulas I did put here just to give you a feel, just to make sure you're understanding that all our assets, some are operating, some are non-operating. That's got to be our total. Our liabilities, some operating, some non-operating. Well, the other way to calculate some of this is current and non-current. That's total assets. Current liabilities, non-current liabilities. There's also total liabilities. So depending on how how it's framed. Net operating asset turnover versus total asset turnover. Operating profit after tax, NOPAT, RNA, return on operating assets. And then when in the next chapter, which many of you probably haven't got to yet, we're talking about revenue recognition, also known as RevRec. There's something called the cost to cost method. I have a video exclusively dedicated. I think my second video on the chapter is cost to cost method, which is basically using the expenses to calculate the percentage complete. Total expenses, portion of expenses done. Performance obligations, that's part of RevRec as well. They did 2017, they redefined revenue recognition and it impacted a lot of businesses. Allowance for doubtful accounts, that's also part of 5, which you may or may not have got to yet. Handling during the month, how do you handle the allowance account during the month? The bad debt expense versus the allowance account at the end of the month. And then the effects of increasing and decreasing allowance percentages, impact on receivables, expenses, and profits. That's all. Nothing to it. If you're ready to take the exam now, feel free, but I encourage you to do some studying and get a feel. This is posted in the announcements, so you do have access to that. What areas do you feel least comfortable with? And chances are module 5 you probably have got to.
Well, my question.
Chapter 4.
Chapter 4, all the operating stuff, non-operating stuff. That I will say that the homework, and I just talked to some others about it. The goal was not to confuse and confound. But some of you are, some of my students are been accounting and finance majors, and many are biology and psychology majors. So the heavy duty, I'm not going to make you do a 45-minute problem on the exam, as I mentioned earlier. I did want you to get a feel for what some of that looks like, because some of you may go into financial analysis. Some of you may want to do the deeper dive in access. Most of you just want to pass the course, and I get that. But the side of it is, I want you to be exposed to some of this deeper dive stuff, more exposure, because you will either be doing your own financial analysis for investment purposes, or seeing other people doing it and appreciate what the accountant does, or appreciate the analysis as it's being done. So I'm not doing it to confuse and confound, even though it may sometimes seem that way. I am doing it to get you exposed to it. But again, I'm not going to do the deeper dive. I'm probably not going to worry about the buffer when we talk about taxes and saying, I got to calculate this percentage. That's probably not going to see that as much, that you have to do after tax add back and have that cushion that you need to add back. I think we were talking about this before we started recording tonight. So don't feel that you are really going to get slammed with the chapter 4 stuff, even though, yes, you do want to understand the operating, non-operating, and the relationships, what the terms mean and where those come from. And so, I mean, if you could have a return on assets, you can do return on operating assets. Well, operations on operating assets, that should be, I won't say obvious, but easily configurable when you're thinking it through. So understand the terms, see the formulas, and merge the two and make that work.
Are we going to have to memorize all non-operating liabilities and assets, that long laundry list, or they be worded in the questions?
Great question. Frankly, operating assets, non-operating assets, operating liabilities, non-operating liabilities, yes, you're going to want to know that. And the same thing for the operating income. The nice thing about that is, you know what? For assets, most of that stuff's included. For liabilities, most except for the long-term debt's included. For operating on income, most of that stuff was kind of included, except there's a couple of interest items and, non-operating items and other stuff that might be there. So most of it's there. And frankly, what I like about having multiple choice is you can say, I included this number and I didn't include this number. Chances are, if you included a wrong number, you won't find the answer. And you might be that much ahead saying, well, I'm not sure about this one. Sometimes they're gotchas because they calculate it both ways and give you the numbers for both. But sometimes it's like, well, I'm not sure. Yeah, I can narrow it down to 2. But yeah, I'm going to want you to understand operating versus non-operating. Fair question. Other questions on your mind? We've taken a long route to get to the exam, but I know you guys are concerned, and rightfully so. And I can appreciate the caring that you are putting into this course and the effort you're putting into this course, because they are substantial. But also, the goal is the learning should also be substantial. Other questions before we attack chapter 4 a little more? Okay, Anything in particular in chapter 4? It sounds like we want to go through that 10 and 11 a little bit more. I think Brooke, you were mentioning that. That might be helpful.
Yeah, and I
Um,
can't remember exactly if it's both of them. I have to look at it. So I was like,
Well, 11 is probably a little bit easier because there's more summary numbers.
yeah.
10 was the detail. And that
Okay,
was-
that's what I was saying. I didn't know if it was both or that's why I think it was the longer one, the more in depth. So that's yeah.
Yeah, question 10. Okay. So again, I'm going to go back specifically to the spreadsheet to start. And because the numbers are going to vary depending on who's we're looking at. So let me go and pull up the spreadsheet. See if that gives you some insight into where we're going with this. And one of the tricks is you had to take average equity, and sometimes it was average assets and average equity. And so there's some averages in there that you had to resolve. So I'm pulling up the template. So let's walk through the spreadsheet to make sure that we can make some sense of what we're talking about. Okay, so this was question 10. And I'm not going to be worried, by the way, as I say, the buffer here, shield, you're not going to have to worry about calculating a tax shield. Because that gets really into the weeds. I wanted you to see it here. I wanted to see it in the module, something to appreciate it, but also to understand the flow of how this went. And I had two different problems here, kind of fill in the blank numbers when we went through this. Okay, so non-operating expenses before tax, and then the tax shield. If you didn't get the tax shield going, you were starting from a negative place. Okay, and so we had to calculate the net income and then the NOPAT, net operating profit after tax. It was nice that the problem did give you a couple of seed numbers as well. I think there's a return on equity that it gave you an actual value for that. So those are some of the things that make sure in the homework, make sure you read the problems completely, because you say, well, I need to calculate this, but wait a minute, it gave me that. So maybe I don't need to calculate that. And here we did have to go current and prior. So when we looked at non-operating liabilities, it was just long-term debt. That was the only thing on the table that we had to worry about. But we did have 2 years worth. Same thing, non-operating assets, the cash and cash equivalents and short-term investments. Those, you say cash, why isn't cash operating? Well, cash is not operating because everything else is, it's generating cash. So we take our total non-operating assets. And then we go through and we calculate. We're coming through and saying the difference between our non-operating liabilities and our non-operating assets, that's the net. So we're taking liabilities minus assets at this point. Okay. So that covers A and B. And once you get through that, that's actually not a bad orientation. The numbers, once you figure out that, okay, which numbers do I plug? And then you can plug them in and you can go forward. And now you got total equity. And total equity, I think was a feeder. I think they gave that to you in the problem. And they gave it to you for both years. If not, you had the balance sheet, you could look at total equity. And then you can calculate financial leverage. You had to calculate the average over the average. Okay. Average net non-operating non-operating asset. Okay. All right. The terms are confusing enough. The net non-operation divided by the average equity. So if we're getting the financial leverage that we're pulling through, non-operating out the liabilities to go with that, I'm sorry, the net non-operating, which is liability minus assets, there we go. We're coming up with financial leverage. Then we have the net non-operating expense, and we calculate, we just pull the number from up here. That's what's previously calculated. And then we have our calculation and the expense non-operating net expense percentage rate that goes with that. Okay, so that's well on the way to D. And then we have the spread followed by the ultimate ratio. So we have the NCI ratio, and the return on equity, and we go through the process. So that was question 10. And again, if you want to go through your example, you want to really get through it, I'm happy to review that. Well, by the way, once you post, you have access to the answers as well. So once you post, once Thursday night rolls around, so by now you should have the answer. I'm sorry, it was Sunday, it was due Sunday. So once midnight Sunday comes, I'm sorry, I extended it till Monday, so it's to Monday midnight this week. So you would have access after Monday night. Today's Wednesday, so you should have access to your answers as well. Okay. Does that make some sense?
Yeah, thank you. I think I got honestly confused. Like you said, there's so many different terms and the net, non-net, not, you know what I'm saying? So I think I just got confused and plugged some of the wrong numbers. So
that would do it.
yeah, and that's why right when you started, I was like, okay, yeah, I definitely did that before. So
okay, exactly. And yeah, again, if you do C11, you see the numbers are much less in terms of, or more logical in there. Average assets, average equity, sales revenue. Those are some of the bigger picture items that we worked with.
Yeah, it definitely was the one with net not operating, not all that. So that was it.
And yeah, if I had a problem like this on the exam, I would panic. So I'm not going to go that way, and you don't have to worry. But they'll be up. But again, as long as you understand the terminology and the elements, you'll be ahead of the game. Okay. Anything else we want to take a look at? Has anybody started chapter 5 yet? Just as a you just finish up 4. Okay. Couple of starts. Good. 2 or 3. Good. 4. Good. Okay, so it should be a little less intense than chapter 4. I want to just touch base on one thing about allowance for doubtful accounts in chapter 5, just so you get some concepts going. You're familiar with net accounts receivable, I hope. You see that term on the balance sheet. That means there must be a gross accounts receivable, and you deduct from the gross an amount you don't expect to collect to get to net. And what's shown on the balance sheet is net accounts receivable. The same way in your income statement. You might have total sales, and we're talking about returns and allowances and discounts, sales discounts. Those things will get deducted from sales to come out to net sales. So we're worried about net sales as our 100% number, because if it's returned, it's not a sale. If someone got a cash discount, it's not you're never going to see that money. If someone got an allowance because we give them a 10%, Best Buy just delivered your refrigerator to your door and had a big scratch on the side. So what happens? The $2,000 refrigerator, they say, we'll give you a $300 credit if you keep the fridge. Bring it down to $1,700. If you say yes, that, oh, it's only on the side, it's going to be against the side of the wall, no one's ever going to see it, you might say, give me the $300 gift certificate or the gift card, and I'll keep the fridge. That saves them from taking it back, taking a return, hassling it, shipping back, getting it fixed, or putting it on the floor because it has a scratch and dent sale, whatever it might be. They just, for the $300, save them a lot of hassle, and you got $300 discount. And I should say a $300 allowance. It's not really a discount. That's an allowance. That $300 is never going to be seen by Best Buy. So that can't be considered revenue. You might also say, you know what? It has a scratch probably because it fell. And I don't want a fridge that fell because it's going to shorten the life of my fridge. And I have every right to return it. So they got to take it back as a return. So that's not an allowance. That's actual physical return. That's not a sale either, because that fridge is no longer sold. So you want net sales the same way you want net receivables. Now I'm going to give you a little picture, and we're going to do a little whiteboarding here right now to talk about this returns and allowances stuff. Because what happens when we're looking at our returns, okay, so we've got accounts receivable minus the allowance for doubtful accounts equals net AR. And some people take a percentage of receivables, some take a percentage of sales, and you're going to calculate. But the trick here is saying, I do not during the month, at the end of the month, I'm going to have something called bad debt expense. And I'm going to have allowance for doubtful accounts. We'll do ADA. That's not the American with Disabilities Act. Those of you familiar with that. But that's the end of month entry. During the month, we do not touch bad debt expense. If we have adjustments during the month, we get a notice of bankruptcy. Oh, I got $10,000 bankruptcy. Company's never going to, I'm not going to see that money. We're going to take that $10,000. We're going to reduce our receivable by 10K because I'm not going to get that money. And I'm going to, on the contra asset account, I'm going to increase, I'm sorry, it's going to decrease my allowance account as well. Because if I say I have $100,000 here in my receivables, and I've got 2K, let's do my AR accounts. You're going to want to use those in the test too. I've got $100,000 in accounts receivable. My allowance account has a $2,000 offset. My net receivables right now is $98,000. If during the month I get $10,000 that I know I need to write off because of bankruptcy, I'm going to put 10K over here, and my receivables are going to go down to 90. I'm going to put 10K on the other side, and my allowance for doubtful account is going to be a -8. And then what happens? Let's say that bankruptcy wasn't a total loss. It went through bankruptcy court, and you get $5,000 cash on this debt. You get 50 cents on the dollar. Well, you're going to get cash of another $5,000. And on the other side of it, you're going to put $5,000 on the ADA side. So what's going to happen? You're going to end up with, in this case, I had -8, I'm down to -3 net, my allowance account during the month. You're going to be making adjustments to the allowance account throughout. You're going to get cash you didn't expect, and you're going to have write-offs that you never knew you were expecting. Otherwise, you would never have given them credit in the first place. Only at the end of the month. Let's say I have at the end of the month a balance of $1,000 after all my adjustments. My ADA is at 1,000. I'm going to erase some of this stuff. Let's see if I can get my whiteboard pen going. I'm going to erase. So I'm going to clear that a little bit. Clear that, make it a little bit neater, make it a little bit more readable. Okay, so if I'm here and I'm in a situation that I have on my receivables sitting on my books $100,000. And I have my allowance account sitting at $1,000. I had all kinds of transactions going in during the month. I started at 2, when all said and got 1. If I say the value of my receivables, oh, I'm sorry, the allowance I need to figure out is 3% of my receivables. So you're saying this should not be 1K. Bottom line, this should be 3K. Because I'm going to take the ending amounts, like when we did when we'll do supplies inventory, we get that adjusting journal entry, and we're saying, oh, I get supplies. I started with 110,000 in supplies. I have 2,000 left. Oh, I must have used up 8. Well, here I'm saying I've got 1,000 sitting in my allowance account. I should have 3. I'm going to have to go ahead and in my bad debt expense, let's erase this. In my bad debt expense, I'm going to go ahead and record another $2,000 for the month. And I'm going to because my $2,000 difference is what I needed to calculate between where I started and where I needed to be. So that's going to be the match. So I'm going to register on my allowance account. I'm not going to touch my receivables until I know they're not collectible. But what I am going to do is I'm going to touch my bad debt expense at end of month only, and my allowance for doubtful accounts at end of month. At that time, come up with the difference. During the month, everything's going in my allowance account. I might have cash in my allowance. I might have receivables in my allowance. Nothing is hitting the income statement during the month. That's sometimes kind of confusing. You're saying, oh, the bankruptcy, $10,000. I must put that in bad debt expense. Eventually you will. Eventually, if we were at that -8 and we needed to get to 3, I'd have -8, I have 8 and 3, I had to have 11,000. I'd put my bad debt expense at 11,000 at the end of the month when I made that calculation. I never touch my bad debt expense during the month. So just to be clear, when you get into chapter 5, some people get confused sometimes when they see that. Allowance is, again, a contra asset account. It offsets the same way accumulated depreciation is a contra asset account. It offsets the fixed asset. The same way our returns and allowances and our discounts, sales discounts, are a contra revenue account. They get reduced, they reduce the revenue. Because if we have a return, if we have an allowance, or we get to take a cash discount, we're never going to see that money. It's not a sale. So we have to reduce it to net sales. When you see an income statement on Edgar, you're seeing net sales. When you're seeing a balance sheet on Edgar, you're seeing net accounts receivable. In the footnotes, and by the way, there's going to be another discussion coming up by Friday. You'll be looking at the footnotes. We're going to be analyzing these annual reports in more detail. When we look at that, the footnotes will explain accounting procedures and policies. They may give you the amount of percentage that you had. But let's think about this. If I said, let's take it one step further. If I said I had not 3,000 or 3%, I had 2%. Oh, well, 2% of 100,000, I was at 100K over here, would be $2,000. If I had to get from $1,000 to $2,000 instead of $1,000 to $3,000 in my allowance account, my bad debt expense would be $1,000. I just reduced my bad debt expense by lowering the percentage of receivables that I don't expect to collect. And what did that do? It just bumped up my income $1,000. Neat trick, isn't that? I can make an estimate, change an estimate, which is what this is, from 3% to 2%, and I up my net income. How many of you have heard of Health South here in town? Okay, Health South, they changed their name. They're based out of Alabama. They changed their name. Let's see, I gotta do a quick look up. Encompass Health. Are any of you familiar with Encompass Health here in town? Well, Health South had a bad rap. Why? Because there was fraud. How did the fraud start? With an adjustment to the allowance for doubtful accounts. This Scrushy, the president, the CEO, who never went to jail for this, who always blamed the CFO, but he put pressure on his CFOs to do this. What he did was he said, you know what? You're a team player, right? We grow through acquisition. Wall Street, we're the darling of Wall Street. We were the Enron of Wall Street when it came to healthcare. That's a bad thing to be at this point. But what they did was they said, this quarter, they're expecting this level of income, and we're not there yet. What can we do to kind of tweak the financials to make it a little bit more agreeable so Wall Street's going to still be enamored with us? They're still going to love us. Oh, well, if we change our receivables, that percentage or bad debt expense from 3% to 2% or 3% to 2.5, that's going to tweak it just enough to get us over the threshold that Wall Street expects. That worked for one quarter. Try it again the next quarter, maybe drop down to 2%. All right, and maybe the auditors catch it, maybe they don't. So what's going to happen? You're going to be in a position saying, well, I'm tweaking it, but my uncollectibles are really 4%, but I'm saying they're 2%. Okay, now we're getting a disconnect. We're getting a gap between what the reality is and what we're trying to make the books do. So then what did Health Sales do? Health Sales said, you know what? We go through acquisition. Can we do some entries here to get our sales numbers higher? And maybe increase our assets and kind of get, we'll balance it. And they actually started making fictitious entries. Translated, they were making stuff up. They were lying. Okay, but they were still growing through acquisition, and they kept growing and growing, and they were still a darling. Eventually, it caught up with them. I know one of the CFOs who was a whistleblower. He was the guy that did jail time, as a couple others did. He was in the top bunk of jail. He started like me in the big 8 CPA firms. He went private, became a CFO, and he lost his family. Well, I mean, they still survived, but the divorce and whatever. But he goes around talking to people about, don't do this. The ethics involved, don't pay. But even as a whistleblower, he did jail time and the president did none. But the president did put a lot of pressure. So you got to be careful when you look at these numbers, you make adjustments and you change estimates. Because these numbers they're not cast in stone. Most of them are based on estimates. We're going in and estimating our warranty expense. Oh, when I sell a car, I'm Ford, I anticipate a certain percent of transmissions are going to fail and I'm going to have to cover the warranty. Oh, well, what happens if I reduce my estimation of warranty? That's going to reduce the warranty expense I need to record this year. That's going to up my net income too. How about that? Or there's also a term called piggy bank account, where you're actually storing some of the stuff, using it later. Maybe I'll make my warranty expense bigger because I had a good year this year, and then I'll cut it back later when I'm not doing so well. So do people doctor the books? They can. Will auditors catch those doctoring of the books? Sometimes. Do you need to be aware of that? Bottom line, yeah. Because it does impact how you interpret these statements and make sense of them. And whether you're going to be an investor, whether you're evaluating a publicly traded company, even when you go to work for a company, you're going to want to look at the annual report. You're going to want to look at the numbers and see how they're doing, see what the trends are. You're going to do your own horizontal and vertical analysis if you're changing jobs. I confess, I looked at the financials of Marion University before I came here. I looked at the financials of 3 other universities that were not nearly as strong as these guys here in Florence. We had some pretty strong financials, very attractive. So good, you're in a good place, you're with a good school, and a fiscally sound operation here. So, but be aware, that's why we're learning this stuff. We're trying to figure out who can play the games. Every day you read about accounting adjustments. Every day you see changes, and you see jail terms for some, and you see other folks that are saying there's nothing wrong. So that's the big picture I wanted to share. And this allowance for doubtful account stuff, just be aware, change the allowance during the month. Don't change bad debt expense during the month. The expense will only get changed at the end of the month when you have to adjust to it to get it there. So that's one of the confusing concepts that people seem to bump into. Is that making sense? Quick show of hands. Is that, are we on the same page? Okay, we'll probably, once you get through this chapter, you're probably not there yet, but hopefully this will help you as well, get you further along. Other comments or questions? We officially have 4 minutes. We're actually going to finish early tonight. That can't be. I don't know. But I'm not going to keep you here. But if you don't have the questions, you don't need to stay here. I'll stick around if there are other questions afterwards too. So please do. There is an activities fair on campus tomorrow. I'll be at 1 to 4. So I can be in my office after 4 if anybody wants to catch up on campus, or we can go online, go Zoom too. We do have a 6 o'clock meeting online with students tomorrow, but so at 5 or 7, I'm available tomorrow. I do my first blue and gold officer interview tomorrow here at the high school in Florence. So for a Naval Academy candidate, but that'll be fun. I was over at Wilson. I might get to go to Wilson. I've never been in Wilson, but I'll be there tomorrow morning. So anyways, anything else for tonight?
Should I send a real recruiter over there?
What's that?
Should I send a green and gold recruiter over there?
Blue and gold? Oh,
I
green and
know.
gold,
green
yeah,
and gold. Should I send one in your favor instead?
sure. Actually, there was a plebe at the Naval Academy this year that came from Wilson. He actually went to college for a year and then came in as a plebe, as a freshman. So Wilson's a good supplier. I'm talking to somebody from South, I'm talking to somebody from West as well, that's fine. So I get to interview them, but it's fun stuff. And I'll get to meet some more guidance counselors and get exposed more to our high schools. International baccalaureate at Wilson, I've always been impressed with. So, neat program. But that's not our accounting, so that won't be on the test, so don't you worry. Anything else in your mind? I'm stalling for another 2 minutes, but I guess I'll hang out as long as you want me here. Thank you very much.
Thank you.
You're very welcome. This will be on the recording, should be posted tonight too. So. Have a good one.
All right, have a good one, Dr. Scott.
You too. We'll catch up tomorrow.
Yes, sir.